Welcome back everyone to the Simple Markets channel. My name is JB, and as you can probably tell from the title of today's video, we are going to be doing a portfolio review for one of my students' portfolios. I'm extremely excited for this video, so excited in fact that you guys can see on your screen. I'm actually encouraging people to reach out to me with their own portfolios at one of the three locations that I have listed here. You can either DM me or add me as a friend on Discord. You can message our support email, or you can even DM us on Instagram at Simple Markets Trading. Of course, if you do leave your portfolio, leave any information that you would want me to kind of leave out or keep anonymous with the message as well. So if you don't want your name, if you don't want the amount of money, etc. Now, the person's portfolio I'm going over today has done a fantastic job at putting money aside. They are roughly 20 years old, and they have actually put away $20,000 into their investment portfolio. He's a great student of ours. He's always working hard on his trading as well as his investments, so I'm very happy to look over it and give him some feedback. And he did agree for me to go over this video and use this for my YouTube channel. So first things first, we are going to have to lay out the facts here. Now, when you are investing or advising someone, it's very important to get all the background knowledge possible and really help lead them towards their goals as an investor. So one of the first things that we notice here is he has been investing since he was 18. He is currently 20 years old. He has net about $20,000 in his portfolio, which is absolutely fantastic. He does have a crypto portfolio as well, which we are not going to be going over today. And his main goals overall with the portfolio were that he wants a long-term buy and hold, so he's looking at the very long term here. And the other thing was that in about 2030, he's going halves on a down payment for a property, and he's going to need about $5,000 to liquidate either from this portfolio at the time or with other methods. So with that knowledge behind us, let's take a look here at his actual portfolio and see what kind of improvements we can make here. So as you can see, this is a layout of his portfolio, and you can see the 5 holdings he has here on the right side of the screen, as well as the allocation based on the pie chart. So as many of you know and are very familiar with, Tesla is a fantastic stock, and that does make up about 55% of his portfolio here. On top of that, he has VOO, which is his second largest holding in allocation in his portfolio, and that does make up about 20% of his total assets under management here. Keep in mind, this is a $20,000 portfolio, so you're looking at about $4,000 invested into VOO, followed by 3 more holdings. One of them is going to be Meta, or many of you know it as Facebook, and that is about 10% of his total allocation in that single stock. And then we also have Amazon holdings as well. Once again, a single stock and about 10% of his total capital within Amazon, making it about a holding of $2,000. Then last but certainly not least, we have QQQM here. Very similar for some of you that hold QQQ. This is the Invesco US 100 equivalent ETF. So it is very similar to VOO, but a lot more aggressive and volatile. So I'm assuming that's why he has the smaller allocation here. My main goal with this video was to keep the portfolio aligned with his interests as much as possible. I see a lot of these portfolio review videos online, and the person making them always just says, scrap the whole thing and make it look like mine, here's my portfolio. Or they essentially tell them to liquidate the entire thing and then go and put it into X, Y, and Z ETFs or stocks. My goal with this video is to keep intact the ideas that he had behind this portfolio, but then give him some guidance on how he can accumulate or move capital into the newer portfolio without having to liquidate and take on that tax burden as well. So without further ado, let's go over to my recommended portfolio for him. And as you can see, we still do have the very similar ideas here with Amazon, Meta, and Tesla, and we will dive into that now. So one of the main issues with having singular holdings of stock, of course, these are fantastic companies, but the volatility of stocks as well as the expense ratio is very high. So for example, something like Tesla in the recession we had a few years ago during the pandemic was about 65% down. That is a significant amount, especially with the majority of your portfolio being inside of it, comparative to something like VOO, where that holds about 500 different stocks and has a fantastic growth rate. During that same recession, we only saw about a 20% decrease in VOO overall. So not only does this give you fantastic upside potential and a lot more diversity in your portfolio, but you actually can capitalize on that upside while keeping drawdown very minimal. This is one of the main dangers of having too many single stock allocations in your portfolio, is that over 75% of his entire portfolio is allocated towards single stocks, and they can be very volatile and down very heavily in certain years. And it doesn't allow you to leverage or use your capital, and it also makes it very difficult to grow in the long term without exposure to different sectors of the market. I still think Tesla is a fantastic choice of a stock. I do think 15% is still a little heavy, but like I said, I would like him to transition towards a portfolio like this. And then of course we can talk again about how he wants to expand in the future. I'm not recommending him to sell off any shares because he's going to take upon the tax burden. And he did talk to me previously about how he expects to just put money into the other positions that are very underweighted in his portfolio, like QQQ and VOO, and eventually scale his portfolio into something that looks like this, as opposed to just keeping the portfolio, liquidating the whole thing, and trying to readjust it with this allocation. But I decided 15%, although still very aggressive for a single stock in a portfolio, I think that's a great goal for Tesla, and especially if he has high hopes for it as a stock. But obviously allocating more towards these ETFs here will keep a little bit more stability and diversification in the portfolio, allowing him to mitigate those drawdowns a little bit better in the future. VOO being 40% of a portfolio, I think it is a fantastic core to a portfolio. It allows for consistent growth. Many long financial advisors or investors recommend VOO as a fantastic holding. It has a great expense ratio and great returns of about 8 to 12% on average per year, and is truly one of the fundamental bases to many investors' portfolios out there, even in the finance sector, and QQQ is another great example as well. Being 25% of his portfolio, QQQ is the Invesco US 100 Alternative ETF, and essentially all this means is that it holds the top 100 stocks in the US stock exchange, which gives you great diversification among those companies, but also keeps those strengths in your corner. Tesla, Amazon, and Meta already being included in both of these ETFs as well. So yes, there is some overlap here, but I do think having 10% in Amazon, Meta, and 15% in Tesla does keep him a little bit more in line with the portfolio he has now. And once he can attempt to diversify more using these ETFs, I think from there it's better to start scaling a little bit more into ETFs and a little bit less into these single stock picks. Some further recommendations once that point comes around, I can recommend VGT, which is the Vanguard Information and Technology ETF, VTI, which is the total stock market index for Vanguard. And I think these are both great options, especially VTI when it comes to diversification, because you are holding the entirety of the stock market here among all sectors. It allows for great diversification in a portfolio, but only having to make that singular investment. VUG is another great pick as well. This is the Vanguard Growth with large cap stocks. And then you have VO and VB, which in my personal opinion, based on the next few years, we can expect to see mid-cap and small-cap stocks make a great rally to try and catch up to those large-cap stocks that had great growth in our high interest rate periods we've had in the last few years. So I do expect to see some form of recovery, and it does give you a lot more diversification in the market overall. So overall, after looking at that portfolio in my recommended one, just some of the main takeaways here is I think more ETF exposure would be a great thing for him. It allows for a lot more diversification, which we can see in point 2 here, and it also just makes investing a lot simpler and has great and much lower expense ratios overall for the investor. Being able to buy one ETF and have access to 500 or more stocks like VOO is a fantastic advantage, makes investing very simple and easy for investors, and also mitigates those drawdown periods that single stocks can see within certain years of time. Individual stock risk is very important to keep mind of. I hold very individual stocks myself. I think ETF investing is very stable and safe and simple for the long term. And as you guys know here at Simple Markets, we like to keep everything as simple as we can. Mitigating those drawdown periods where single stocks can be, for example, in negative 65% returns in the year like 2020 where the pandemic hit, can make sure you hold on to your base and keep the portfolio intact so that you can take advantage of those gains in the long term as much as possible, and by the year 2030 may have that $5,000 or more to go and liquidate from your base. I think overall he's doing a great job with investing. $20,000 at 20 years old is fantastic to have set aside. He's doing a great job on saving and budgeting clearly. So hats off to him. He's a great addition to our community, and I really enjoyed going over his portfolio here and giving my advice on it. Of course, as always, this video is educational purposes only. This is not financial advice. This is simply my preference and based on my education, what I would recommend. But if any of you do have your own portfolios that you would like me to go over, whether in private or in video, feel free to send them to any of the links I mentioned at the beginning of this video. You can reach out in DMs and we will help you out as much as possible. Thank you all for watching, and I will see you guys in next week's video.